What's really exciting is that we're finally seeing an acceleration in the pace at which projects reach final investment decision across the globe. 19 final investment decisions taken in the past 6 months. Out of those 19, 16 are in China. So it's really China leading the transition. Here are projects that can bring jobs to certain regions, that will bring investment, and that appeals to governments more, if we're honest, than the climate imperative. What's exciting is it's one of the biggest pipelines globally. It's exciting because that pipeline builds on the natural advantages of the country. Loads of solar, mineral resources, both for steel and for aluminium. There's great potential there. What we're hearing from project developers, wherever they work and whatever the sector, is
welcome to Before It Scales, the podcast about first-of-a-kind clean energy and industrial projects, the people building them, and what it takes to get them across the line. I'm Joy, a principal at Cyan Ventures, and I'm joined by my co-host today, Shaun Chau, Cyan's co-founder. Before we begin, we'd like to acknowledge the traditional owners of the lands on which we are recording today and the traditional owners of the lands on which you're listening. We pay our respects to elders past, present, and future and extend that respect to all Aboriginal and Torres Strait Islander peoples. Our guest today is Faustine Delasalle, the CEO of Mission Possible Partnership. This is the organization that is mobilizing business, finance, government, and civil society to speed up the shift to clean materials, chemicals, and fuels. MPP just released the 5th edition of their global project tracker, and the headline is that 2026 is on track to be the strongest year for clean industry investment to date. Cyan Ventures works very closely with MPP, including on a deal tracker for Australia, which we'll talk about more today. For listeners who don't know MPP, perhaps you could explain a little bit about what MPP is and share a little bit about the origin story.
Yeah, it was great pleasure. Mission Possible Partnership is a relatively young organization. We've been around for almost 7 years now. And it's an organization that is entirely dedicated to advancing the clean industry transformation in some of the most energy intensive sectors. You've mentioned materials, things like steel, aluminium, cement, chemicals as well, and fuels, especially fuels for aviation and shipping. And so over the past years, I think we started back at a time when nobody really believed it was possible to decarbonize those sectors. So our first few years as an organization were really spent demonstrating that decarbonizing those sectors was feasible and convincing leading corporate players that that was the direction of travel for their sector. And once this direction of travel had become more mainstream, we've really refocused our attention on how do we get the first wave of clean industrial projects, commercial scale ones, off the ground. How do we ensure that we see green steel projects, green ammonia projects, low carbon cement plants really being built across the globe? And so over the past years, we've been working on this across multiple geographies, including in Europe, in the US, but also in Australia and across many emerging markets as well.
And you've just released your latest edition of the GPT, the Global Project Tracker, as I mentioned in the intro. Maybe you could share some of the headlines from that work.
Yes, it's been now a bit more than 2 years that we've been following the project pipeline of commercial scale deep decarbonization projects. What's really exciting is that we're finally seeing an acceleration in the pace at which projects reach final investment decision across the globe. We're now at 19 final investment decisions taken in the past 6 months, which is almost as much as throughout the entire year last year. And out of those 19, not surprisingly, 16 are in China. So it's really China leading the transition at this stage. But it's not only China, because we do have about 6 FIDs outside of China in those 6 months, with a good mix of developed economies and emerging economies on the map. So we're also seeing that there are opportunities for very different types of countries, with different competitive advantages. And that's a good story because it means that there are chances to develop a green industrial base for a broader set of countries probably than those that currently have an industrial base.
That's a really exciting story, Faustine, and great to hear that both that there's more FIDs and sort of more countries involved in those FIDs. When you look at the trajectory from the first tracker to this fifth edition, what do you think's changed most in how you think about the pipeline?
What I think is happening is that in a number of sectors, well, there's a few sectors that lead the pack, I'd say. And those are fuels and chemicals, primarily sustainable aviation fuels and methanol are really leading the way. Green ammonia slightly below, but following. And I think that has really been driven by policy frameworks in those sectors. And we've really seen the impact of the EU SAF blending mandate, for instance, on the SAF pipeline. The capacity past final investment decision for sustainable aviation fuels production has doubled since the EU put in place a blending mandate. So it really drove investment. And we're seeing a similar dynamic around methanol, especially in China, because China has developed a number of strong policy frameworks to incentivize methanol use domestically, including in road transport. And that has also driven big investments in green methanol plants in China. So I think that's one part of the story. The other part of the story is that in a number of sectors, the first of a kind has now been done and is operating. It's true for cement. It's true for steel. And so once you've done that first of a kind, I think you see two things happening. First, the timeline for the next of a kind becomes shorter. And I remember a very good conversation with Heidelberg, who did the first CCS on cement plant in Brevik in Norway, telling us that it took them 20 years to get that first plant to operations, but that they were expecting the next plant to be 10 years and the following plant to take 5 years because they've learned from that experience. They know the process much better. They can fast track the development. So I think that fast tracking of the development will probably happen now that we have first of a kind, second of a kind plants in the sectors that are less advanced. And the other thing that happens is that when you have a first of a kind up and running that proves that the business case can work, you obviously inspire others to follow through with their own projects, and you start seeing a multiplication of projects based on the same principles. So I'm hoping that those two dynamics mean that the acceleration we're seeing in the past 6 months will continue going forward.
And you mentioned low carbon liquid fuels and green steel and others. Which are moving the fastest? It feels like maybe that's fuels. Is that right? Is that what's driving the momentum?
Yes, it's sustainable aviation fuels that has the biggest pipeline past final investment decision. Nearly 50 plants, half of which are now operating, because you do have to feed a market that does exist today in some parts of the world. Methanol close behind. I think green ammonia was following fast and has hit a bit of a pause in the past 6 months. Primarily due to developments at the International Maritime Organization, we believe, because there were a lot of project developers banking on regulations in the shipping sector as the likely source of offtake, both for methanol and for ammonia. But for methanol, you have more diverse offtakes in China. For ammonia, there's less diversity of potential offtakes. And so the green ammonia pipeline, now that the IMO discussions have been slowed down, seems to have slowed down as well.
So could we say now that that sustainable airline fuel is nth of a kind globally?
Yes. Yeah, I think, and it depends on the technology, right? Because you have different SAF production pathways. And so the most mature one is the HEFA pathway based on oil. So waste oils, crop oils, but we have a preference for waste oils versus crop oils because it's more sustainable. That pathway is really nth of the kind. Then you have more advanced bio pathways that can take up more diverse forms of bioresources. Those are a bit less mature than the HEFA pathway. And I think the least mature is the synthetic route. So producing sustainable fuels from renewable energy and carbon. That hasn't yet really take off. I think we have a couple of plants past final investment decision globally. We're really still in first of a kind territory.
And you mentioned that, you know, when other projects see, or there's an inspiration part of the story where other projects will be inspired when they see if one first of a kind project being done. But what else is the implication of nth of a kind? I mean, I imagine costs start coming down and there are other benefits from getting to nth of a kind status.
I think there's multiple benefits. You're absolutely right that we're expecting costs to come down with scale, and that varies by technology. The cost path may be sharper in some technologies than in others because they're more replicable. They include the equipment that can be manufactured at scale. But there's also just familiarity. Like companies get skilled about developing those projects and operating them once they've done the second, the third. Investors also get more familiar with what a good project looks like and perceive differently the risks associated to those projects. So the cost of capital can come down. So there are multiple layers that make the nth of a kind much easier than the first of a kind.
Yeah, that's really interesting, Faustine. Coming back to the China story, I mean, when I read the Global Project Tracker report, that was probably the kind of key story for me was, you know, China seems to be really leading the pack. I mean, can you say a little bit more about what China's doing and why it's been so successful in getting projects to FID, in particular some of the methanol projects, I guess?
Look, I think there's a long-term strategic vision in the Chinese way of pursuing this transition that is rarely replicated in other regions of the world, which means that there's long-term certainty for producers on the fact that they will find a market because that market will be facilitated by government regulation. They also benefit from very low cost of capital and significant subsidies for the first of a kind projects. And then there's an innovation and scale up ecosystem that is really test and trials that I think has shown its power on other clean technologies like renewable energy equipment and solar manufacturing in particular, where you have a combination of vertical integration in some companies that are just adding layers to their capabilities all the way from equipment manufacturing to plant integration. You have a competition between multiple providers and suppliers, so the best really wins within the country. I think what facilitates also all of that is the scale of the Chinese market. And we're really seeing that in the global project pipeline. China now concentrates 45% of the projects past final investment decision globally. Coherently enough, about 45% of the equipment that goes into the global project pipeline, the industrial process equipment, also comes from China because the Chinese provide to the Chinese. But compared to other regions of the world, Europe that has about 25% of the global project pipeline, US that is lagging behind now at below 10% of the project pipeline past final investment decision. It means that the Chinese can scale their equipment manufacturing much faster than the rest of the world because they benefit from that boom of their local asset footprint. And that gives them an edge in terms of technology development. So it's a self-reinforcing cycle as well.
Yeah, and so I guess the obvious question off the back of that is, you know, how should we regard China's success in this field? Because like you say, I mean, I suppose if you're Chinese, it's a great story, but they seem to have very unique characteristics. They have a size of market and an industrial strategy that's hard to replicate for a lot of other countries or continents. I mean, what do you think the kind of key takeaway is if you're, you know, not Chinese, I suppose?
I'd say a couple of things. One is that there may be technologies that are not strategic enough that we'd be comfortable using Chinese technologies that have already reached a very low cost, especially for technologies that are one-off buy, and then you don't need to buy again over a period of time. Things like solar panels, for instance, where they have built their edge. And we're seeing that in the data points as well. About 80% of the renewable energy equipment to clean industrial projects past final investment decision now comes from China. The bulk of the rest, like there's a bit of India and a bit of Europe in the mix, but it's primarily China. I think it's because they have gained a cost competitive edge, but there's also a lower strategic risk to depend on China for a one-off import of materials and then have a pretty long lifetime. It's probably different for equipment or products that are required on a continuous basis, where you don't want to be dependent on one single source of supply. And there, I think different countries joining forces can reach a bigger scale of market. So if Europe and multiple emerging economies and Australia were joining forces to simultaneously scale their markets for low carbon commodities, and made their picks on which technology providers they want to see grow in that market, then you could get to a scale similar to the one the Chinese have reached. But it's more complex because it requires international collaboration between different middle powers. And I'll refer back to Mark Carney's speech at the beginning of the year. It really does require collaboration between middle powers to reach a scale of market that is comparable.
Yeah, and Australia definitely needs to do that as a middle power. I mean, what do you think? Which sectors do you think are most kind of attractive from that collaboration perspective? If you had to choose some, especially thinking about it from an Australian perspective.
There are two sectors that really jump out for me. One is fuels production, also because there's a discrepancy often between where you have most fuels used for aviation and shipping. You have big transport hubs that concentrate a lot of the fuels use. And those transport hubs may not be best positioned to produce those fuels at a low cost. And so you have a good kind of complementarity between potential fuel producers around the globe, and especially in Asia Pacific, and potential offtake hubs that really require a lot of fuels and are currently dependent on fossil fuels imports that have proven volatile, both in terms of cost and in terms of just certainty of supply in the past months. So that's one area that I think is particularly interesting. The other that I think requires also deep collaboration between countries is green iron and steel. And again, Australia is well positioned because of iron ore resources and solar resources that combined can enable the country to produce green iron. And that green iron can be exported to major steel manufacturing hubs that may not have neither the iron ore reserves nor the solar or renewable energy reserves to do green iron production at scale and in a competitive way. So those are really two areas that I think are really important for Australia, but for Australia's trade partners as well.
I wanted to jump in with just one thing that I heard about China today, which I thought might be worth mentioning, is apparently there's an emerging trend where project developers are going to China to build their projects to get to FID and sort of demonstrate that first of a kind project so that they can then take it back to their nation, their respective nations, and then take it from there. So almost sort of using China's resources to demonstrate the technology and the approach and the project, and then bringing it back home. Have you seen that in practice? It's the first time I've heard of it, so I was curious.
But I hadn't. So it's a really interesting example. What I think we've seen more of is project developers seeking technology partnerships with China, project developers seeking co-investments with China, and Chinese players starting to invest abroad. So for instance, one of the plants that have reached final investment decision in the past 6 months is a sustainable aviation fuels plant in Thailand, which is, China owned and China operated. So that's one of the examples of, the footprint growing, beyond Chinese borders.
While we're on the topic of China, Justin, I mean, I'd love your view on how you think Australia should approach China, because I suppose there's at least two schools of thought on this. I mean, on the one hand, we sort of almost need Chinese technology and Chinese know-how to build some of these first-of-a-kind facilities, because as you've said, a lot of the kind of equipment and manufacturing capabilities now exist in China. On the other hand, there's a strategic, I suppose, geopolitical play that's, bifurcating the world between, I suppose, on the one hand, China and some allies, and the US and some allies, and Australia to a certain extent is caught in the middle. I mean, any words of wisdom for how you think we should be approaching this very thorny topic?
I'm no geopolitical expert, right? But the way I'm thinking about it, because we're seeing the same type of tensions and questions in Europe as well, is that I think no country wants to be dependent on one single trade partner. And so you have to find a careful balance. It's often not black and white, right? It's the gray area where you have to find the balance between, yes, importing some of the good stuff, but also developing your own manufacturing base, ensuring that you have multiple offtake markets, not just one, multiple supply markets, not just one. And that requires kind of nuanced thinking. It also, I think often means that you can't just rely on competitive forces to drive this. You need a national industrial strategy that has been well thought through, based also on geopolitical considerations, and that then drives towards a mix of suppliers and a mix of off-takers and a local manufacturing base that takes into account those geopolitical considerations. I don't think you can just rely on market forces to drive that. Or you might reach a result that geopolitically is really difficult to hold. But it's a very interesting debate that I think we're seeing play out not only in Australia, but in other regions of the world as well.
Yeah, and I think it will go for some time. But maybe leaving China for the moment. I mean, I suppose, on the one hand, you've got this really great news story on the sort of, number of, financial investment decisions. And, I think it was, $43 billion in 6 months, which is really amazing. But I guess that's, a pessimist might say that's a fraction of the announced pipeline. What do you think's happening between kind of the announcements and FID? Is the conversion rate improving? What are some of the key barriers that remain?
And there's obviously lots of barriers, right? We're far from the pace of transformation into construction phases that we would need, especially given the climate emergency, but also given the competition between countries and with China that we've just described. What we're hearing from project developers, wherever they work and whatever the sector, is we need demand, right? That becomes and remains the barrier number 1, 2, and 3 to projects reaching final investment decision. Projects need sufficient revenue certainty to attract investors. That revenue certainty in sectors where the green product is still more expensive than the gray product requires policy frameworks to drive adoption. at scale. We have still policy frameworks that are too patchy and not ambitious enough to drive that demand and therefore unlock investment. So I think that's the core of the story. There's obviously plenty of other barriers to investment that project developers face, including access to your energy, low cost, clean energy, grid connections, planning and permitting processes and timelines, manufacturing supply, cost of capital. But you can work on all of those. If you don't have revenue certainty, you won't see projects move forward. So I think we know what the number one bottleneck is. We often know what the solution is as well. But it requires policy leadership, to be able to crack it.
And on that point of what's working well and the solutions that we know about, have you seen anything innovative in this latest round of FIDs over this last year? Like, that's really impressive and inspiring.
So not necessarily in the past 6 months, but if we take more around the last 2 years, there's a couple of FIDs that have been sustained by innovative, what we call green market makers. So intermediaries, that enable better matchmaking between suppliers and off-takers and take out some of the risk and some of the green premium. The leading global example is H2 Global, an organization that was founded in Germany and has now enabled deals across the hydrogen and ammonia value chains. So that's a type of mechanism that we can see as relatively fruitful to enable the first of a kind, the second of a kind. We're also working on similar mechanisms, a bit different, things like contracts for difference in other markets as well. Auctions mechanism have been used, for instance, in India by SECI to do a first wave of green fertilizer projects. So those are really interesting, I think, to de-risk the very first investments, with a note of caution on their scalability, because they do require significant amounts of money from government generally. And so you can't extend forever and have never and underpin 100 plants with these type of mechanisms. They're really helpful to get the first 2, 3, 4 projects off the ground in a way that is as subsidy efficient as possible, and more efficient than just distributing subsidies without any form of competitive process and auctioning.
Yeah, it might be good to go through a little bit more detail the sort of H2 global example, Faustine, because I think most people, I mean, we've heard of it obviously, but I think most people listening to this podcast probably won't have. It'd be great to get your understanding of, how it works and why you think it's been more successful or more innovative than some of the other mechanisms.
Look, it's a double auction mechanism, basically. So you have an intermediary that does an auction to purchase typically green hydrogen from suppliers, and will purchase from the most competitive suppliers. And then the same organization does an auction to sell to potential off-takers, and will sell to the off-takers that accept the lowest price. And then that intermediary absorbs a lot of the risks for both suppliers and off-takers. Risks like risk of non-delivery, because they can purchase a bit more than what they will off-take, to take into account the fact that some of those volumes might not materialize. They absorb some of the price volatility risk, and they also absorb whatever is left of the green premium between the price accepted by the suppliers and the price accepted by the off-takers, because those won't necessarily match, at least at the beginning. And so those are really interesting intermediaries to enable first transactions in markets that are still very immature and where off-takers and suppliers might struggle to come to terms that satisfy both.
Yeah, and I think the first auction, first auctions have happened, and have they? I mean, I'm interested from a sort of theoretical perspective, because I think as a policy nerd, it makes a lot of sense. But have they actually worked? Because you need a certain number of potential off takers, you need a certain number of potential buyers. The market still has to be semi-liquid. Has it actually delivered from your perspective?
It's still early stage. What I think the H2 Global team has found is that they do find the suppliers. And the suppliers really benefit from the stability of demand that is offered by an H2 Global. It seems to have been a bit more of a struggle to find the off-takers, which is unsurprising because we come back to the same question. Even with such an auction mechanism in place, there is a premium for the green product. And if you don't have policy incentives to drive demand, then your voluntary demand can exist, but it remains relatively limited. And so I think these mechanisms do not replace a demand pool. You really need to combine them with regulations that drive demand at scale.
Yeah, you can't get away from the basics. That makes sense. One other sort of topic that, MPP has often talked about is a sort of tipping point in some of these markets. And, the idea that once sort of green products reach about, 5 to 10% of market share, economies of scale, grow, and then growth sort of becomes exponential. How close do you think we are to that in any sector?
I want first to say that this is a conceptual framework that has been developed based on experience from other sectors, including like in completely different sectors like communications technologies, etc. But in general, deployment of new technologies follows an S-curve. So it starts very slowly and then it hits a tipping point and you start seeing exponential deployment of the technology until you've kind of secured the market, and reaching saturation, you start slowing down and hitting a plateau. And that's something that we see again and again and again in history, all the way back to when cars replaced horses. But it's the 5 to 10% mark is a conceptual 5 to 10%. It's not a magical number where we know when we hit 5%, suddenly we hit exponential, right? It's a bit blurrier than that. That said, I think more recently we've seen that dynamic in renewables as well, and in the deployment of solar, in particular, and of batteries and EVs. So we have more recent examples as well showing that dynamic. In the sectors in which we operate, I think what's quite encouraging is that we're getting close to that point in a few sectors, including sustainable aviation fuels, including methanol, and ammonia is following. We're very far from it in the materials sectors. And so that exponential curve hasn't been hit yet, I think. But hopefully it's not that far away in some sectors. And what's interesting is that if we hit that point, especially for green ammonia, then it might facilitate that tipping point for other sectors, because green ammonia is one of the first sectors that might reach scale that use a lot of green hydrogen. And so if you start seeing green ammonia grow exponentially, green hydrogen production grow exponentially, we are relatively confident that we would see cost of green hydrogen come down, and that would benefit every other sector that might use green hydrogen, including steel, including synthetic fuels for aviation. So that's one that we monitor very closely. We really see ammonia as a first domino of a lot of the industry transition.
And Faustine, like we mentioned in the intro, maybe we can talk a little bit about the trackers and the importance of visibility. So Cyan and MPP have been working together on a clean deal tracker for Australia. So I guess that's a subset of your global version. And surveying projects directly to understand sort of the hurdles that they're facing and what support they need. And I was curious to sort of understand how Australia's picture compares to what you see globally. What have you seen work elsewhere when governments and investors act on this kind of granular project level intelligence? Like, how much does having that visibility over the tracker help to get some of these projects through?
The Australia Clean Deal Tracker that we're developing together is actually a first of a kind for us. So it's the first, most structured example of doing this type of following up on projects with a relevant group of stakeholders, including government stakeholders around the table, to monitor progress and barriers of a subset of projects that are relatively mature and that we want to see come to fruition. But we've had experience doing that in a slightly less structured way in a few other geographies, including, for instance, in Brazil. And what we've seen, it's quite curious for me, but one of the things we've realized is that governments do not know their project pipeline well. So just the fact of bringing to them knowledge about what the pipeline looks like, what type of investment you could expect, where the projects are located, which matters from a pure politician perspective, what barriers to investment those projects are facing, whether they're at risk of just disappearing from the map because they're running out of money as part of the development process. All of those things are often unknown from governments. And so bringing that awareness to them enables them to have the knowledge they require to act on it. Without that knowledge, they can't act. So that's one thing that we've found is really powerful. What we've also found is that by doing that, you transform a conversation that is often quite full of shoulds, a climate-driven conversation of we need to transition towards clean industry because of climate imperatives, becomes a conversation about here are projects that can bring jobs to certain regions, that will bring investment, and you shift to a story that is an economic development story, and that appeals to governments more, if we're honest, than the climate imperative. And so that shift in the tone of the conversation really helps in getting exactly the type of things that we would argue for as part of a climate narrative, including the right policy frameworks to drive investment. But it creates a different case, or articulates the case differently to policymakers on why they should do it. And so I think that type of engagement really helps, and it helps to do it with a perspective on what are the shared barriers that multiple projects face. Obviously, if all of your projects tell you that they have a problem around offtake, at some point government hears that there's a problem around offtake. But it also helps, and it happens obviously behind closed doors, because you need to be very careful about the confidentiality of some of those data points, on a project by project basis, saying, well, that particular project has really a grid connection issue in this region. Is there anything that can be done about that grid connection issue? Or this project would like to benefit from a free trade tax exemption. That's an example we had in Brazil, but isn't located in a region that is considered as part of those free trade tax exemptions. Can that be reconsidered? So it becomes more granular, and I think it can help individual projects also overcome some of the barriers they face.
Yeah, that's really insightful, fascinating. And so when you look at the Australian sort of clean deal tracker, I mean, what are you most sort of excited about, and where do you see the biggest risks, I guess?
Like, what's exciting is it's one of the biggest pipeline globally. I think you're now in fourth position globally after US, China, obviously first US and then India. So the pipeline is there. And it's exciting because that pipeline builds on the natural advantages of the country, right? It's loads of solar, mineral resources, both for steel and for aluminium. There's great potential there. The risk is that that pipeline is not moving towards a final investment decision. And so, that holding pattern can only last so long before project developers run out of funding, and have to completely drop projects. And so there's an urgency, not just because of the competition with China, not just because of the climate imperative, but also because that pipeline eventually might shrink if it doesn't come to fruition fast enough. But I think that's a conversation that we're seeing mature, and you'll know that better than I do, especially in the context of the current energy crisis, the realization that we need to develop clean industry not only for climate reasons, but also for resilience reasons and for economic reasons, I think, is strengthened. And that hopefully will lead to greater movements. And if we can use the data points from our global project tracker to also demonstrate to Australian stakeholders that there is an opportunity, but the window of opportunity may be closing, then we'll be happy to work with you to make that case.
We were doing that in Canberra last week, James and I. So yes, very much on the agenda.
I think that's probably an excellent place to leave it. That was super interesting. Unless there's anything else that we're missing that you'd like to cover.
No, I think we've covered a lot of ground during this conversation. And again, it's exciting to see what potential new developments are on the horizon for Australia.
Yeah, definitely. Thank you so much, Faustine. Yeah, really, really insightful points. And we'll send you the kind of highlights of the podcast.
With great pleasure.
So Shaun, that was a really great chat with Faustine. Curious to know, what surprised you most? Did it change your view on anything? Or do you have a top takeaway to share?
I suppose I really liked, I think what's not well known is that, I think for the people working in this space now, there's a viewpoint that low carbon liquid fuels will be the first sector to go. And then the other big sector for Australia is green iron. And I think, FMIA dealt with a whole bunch of different sectors, and, we've experimented and we've tried, and then the global market has changed in various ways. But I think if there's clarity on, low carbon liquid fuels and green iron being the two most prospective, sectors for Australia outside of critical minerals, which NPB doesn't deal with, then I think that would be a really important takeaway. And for me, a big thing that Faustine said. What did you think?
I mean, I think what was really interesting is the nth of a kind. And I think that's maybe something that we don't talk about enough, is the opportunity set once we get past that first of a kind, and maybe looking globally at what's been done well overseas, and is already past that first of a kind hurdle, and shouldn't be considered first of a kind here. And also curious about sort of nth of a kind is happening overseas in things like SAF. So what does that actually mean for our competitive position? Like, are we falling behind very fast? And what do we need to do to catch up?
Yeah, I mean, we do have a bunch of SAF projects in the pipeline, and hopefully a mandate coming out soon. So, fingers crossed on that.
Working pretty hard to make that happen.
Yeah. I think the other big thing for me was, the China angle. I think Australia is in a very unique position with respect to China. We both have a pretty close relationship with China on a number of different fronts, whether that be on the solar value chain or the iron value chain, to some extent the lithium value chain. And so we're very much exposed to a number of those relationships. We could bring in a lot of that technology. We could develop some of that technology. So I think there is an interesting play for Australia in that space, but something that, as a country, we probably haven't, developed enough, both thinking and a sort of operational model. So for me, that's definitely an area of interest.
And just to close out, what are you keeping an eye on this week? What's important to you, or keeping you up at night, or making you think?
Well, the big thing is, as we mentioned, so Mission Possible Partnership. So James Boyle and I were in Canberra, last week, and everyone wanted to talk to us about the low carbon liquid fuels mandate. It is the big deal. It is the thing, as Faustine said. Offtake and demand are the biggest things to get projects to financial close. And so if we do have a low carbon liquid fuels mandate, and one that's sort of broad based enough and kind of rigorous enough to apply to enough different types of technologies, that would be a real game changer for the sector, but also all of these sort of green deals. Because once we see some of them get to FID, we'll undoubtedly see more.
And like I said, this is my third, or I said offline, but this is my third podcast recording within the last week or so, so I won't bore listeners with yet another, with a repeat, but I'm really excited to get started on the Green Fuels Accelerator. I think we're having our kickoff tomorrow, so I'm going to add links to our press release for that in the show notes, but that's a really big piece for us, so excited to work on that. And that's it for this episode of Before It Scales. If you enjoyed it, please subscribe on Apple Podcasts, Spotify, or wherever you listen, and sign up to our newsletter at cyanventures.com.au for episode clips and show notes. We'll see you soon before it scales.
Thanks, everyone.